Aloha, this is Joshua Hayes at BigWaveTrading.com for your November 21st market wrap-up for you to use on November 24th. Before I even start today's market wrap-up, I want to discuss something. I have had more conversations today about the end of the world and the market never coming back to a point that I've never had before. It is literally 6:13 p.m. Hawaii time, and since I've been awake at 8 a.m., got into my chat room around 9 a.m., I have done nothing but talk about doom and gloom and end of world stuff. Thankfully, I'm pretty positive outlook on life, and I don't even care what happens. I don't put my faith in the market or in man, so I can live with it. But I want to tell everybody, don't worry. It doesn't pay to worry. My job is simple. I'm supposed to make you as much money as possible. And I had a story today with somebody who's originally from Russia, that's lived here his entire life, went to school and owes a lot of money in loans. This is what motivates me to do this every single day. I do not do this for me anymore. It stopped being enjoyable for me in 2000. And ever since 2005, when I got my stuff together and was able to start a blog, it's always been about others. And the stories like I've heard today is the reason why I can't give up and why you can be sure I will be here forever until I die. When I'm on my deathbed, there's nothing I can do. And I only pray that hopefully somebody out there has learned enough from me and has made enough money that they will hopefully create another website if I do go away. Hopefully one of my guys will take it over. But anyway, let's go ahead and start off now. Today was very bullish for the S&P 500 in that volume was heavier than the day before. Now, could it have been capitulation yesterday? I guess so, but was it in my book? Heck no. Why not? Because look at September and October's volume. By the way, I want to let you know I'm not moving my cursor because I'm buying a new mouse tomorrow, and right now this computer is freaking me out because it likes to freeze up constantly because my mouse is going out. So I'm not going to move it. So you're just going to have to follow along with me visually. September and October, as you can see, has two huge volume bars. If volume would have been that big yesterday, I would have called it a capitulation volume. But instead it wasn't. And even though we had higher volume today, the sad fact is that we didn't give back all the 6.71% drop yesterday. We only gave back 6.32 in this index. So it wasn't as bullish as it seemed. We are back to 800. And there are some signs that we could be putting in short-term bottom. I had 12 partial sells today, 12 partial covers to take profits or cut my losses in. All of my recent shorts are failing, which shows to me that the tide might be changing. And one short I had actually became a full cover today, and I can't remember the last time we fully covered anything. So this is quite different than what we've seen before. And also, there are some nice charts that I'm starting to see. I don't want to jinx it by showing it here on the free commentary, but gold and platinum subscribers, when we go to part 2 after this, I'll show you the very nice looking long charts, and then I'll show you why we didn't have any shorts also. So we're only 3:30 into this, so we got plenty of time. So now let's go on to the Dow Jones Industrial Average. Let's go ahead and move right on down the line here. As you can see, it came back completely, 6.54% today. Volume was higher than yesterday, which is a great short-term reversal possibility. But a bottom, probably not. October and September's volume, as you can clearly see, is much higher than where it was on today's rally. The NASDAQ 100, we have some sad news there. Despite the very nice 4.73% gain, which took care of the loss of 4.7% yesterday, volume was lower. Also on the NASDAQ, as you can see here, volume was lower. We lost 5.07% yesterday. We gained back 5.18%. I have to look at the IBD 100, or excuse me, the IBD newspaper to see if volume was higher or lower on the SP 600. I assume it was probably higher if the SP 500 was. But it was down 6.36% yesterday, only up 5.72% today. Like I said, there was not capitulation volume yesterday, so I can't be saying that we for sure bottom. We could have a nice rally, though, as there are a few charts that look okay. Much better than yesterday, as it only looked like everything got destroyed yesterday. But luckily, a couple were just hiding. So there weren't just only two stocks that still look good. There's still a handful to two handfuls, which is still the lowest number ever since I personally started in 1996 and well trounces 2000 to 2002's bear market. So just keep that in mind. The good part about today, heavier volume. Now, I want to take a look at a few side indexes. Gold. Remember how I said gold was making lower highs March, July, October, November, and it was making lower lows March, April, May, August, September, October. So I assumed the trend would stay down. I did tell you it was in a consolidation area right here. And if it resolved itself to the downside, the downtrend would continue. But if it resolved itself to the upside, the trend would change. And it sure did do that. And it resolved itself to the upside very nicely, rallying 7.26%, closing right on the 50-day moving average, as you can see. You can't get any closer, above, or down below it. It is right on the 50-day moving average. So gold had a very bullish session today. So let's take a look at oil. Oil is holding steady, slightly down. It rose, ticks back up to 50, but still closed lower than it even closed yesterday. At 49.65 to 49.62, oil continues to fall. I don't believe oil will be low enough to be a big enough tax cut for the consumer to help them out from their 2-hour drive to and from work for a total of 4 hours until oil hits below 40. So until we hit 40 or below, sorry, the economy is so messed up and our taxes are going to probably fly through the roof that I just don't see any hope that oil can get that low and even help, really, to be honest with you. I got to be honest with everybody. Now, I'm not bullish about the future, period, but I know that bull markets spring up whenever you're least looking for it, and even in horrible, horrible markets, bear market rallies can produce some huge winners, and there are some longs we are going to look at in part 2 to prove this. And also, don't forget, I'm long 3 stocks now. 2 of the 3 of the stocks that I'm long were in the 100K scan today of only 10 stocks. 10 stocks out of 8,000 show up in this scan, but 2 of the 3 stocks I'm long do. And also, out of the 38 shorts I have, only 1 gives me a full short cover. So I'm obviously doing something right. I still am completely confused as to why CNBC doesn't get any opinions from me, Bloomberg, or any of the radio stations, but I think I do know why. You do need to run other people's money. And I used to do that a long, long, long time ago. I've been offered a few jobs since then, one really great one in Chicago, and recently possibly one in New York City, which I am going to turn down. And it's just because it's better for my health, and it's not worth it. I see what they go through on Wall Street, and I've been there once before, and it's not for me. The country lifestyle is for me, bottom line, whether it's on an island or if it's on the mainland. Either way, it's going to be big wave trading because I go for the big wave, the big movement of the pattern. So if I move, don't worry, it's not going to change anything. But just as you can see, I don't think oil's going to help. But let's look at the dollar index just to make sure that the dollar isn't falling apart like Peter Schiff predicts. As you can see, it was a slightly down day, but what do you have once again? A tail. And I want you to notice, since it took the 50 and 200-day moving average, if you look closely, you can see bullish intraday sessions all over the place. These tails that you see in all of these price patterns that I'm pointing and stopping at show you that the trend is very bullish. And then with the open bar days like this, tail, 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 open bar, fully open bar day, a resumption or a breakout of the flag pattern higher from another consolidation area before that, tail, tail, tail the last 3 days. The dollar's still bullish now. Peter Schiff's prediction of a dollar falling to, I guess he thinks probably 30, 20, or even 10 could come true in the future. Soup lines could be a possibility. 30% unemployment could happen. It's almost at 8.5% in California already. There's a socialist state. That's the direction this country's going. If anybody actually thinks that's going to be good news for the country, you're wrong. I can only pray that tax cuts do not go up at all during this economic downturn, because it has been proven over and over, even by a Democratic president named John F. Kennedy, lower taxes produce higher revenue. Higher taxes produce less revenue. If you want to get more revenue going into the government for your socialist projects, you need to keep taxes low. You cannot raise taxes, especially in an economy that is completely falling apart. I hope we get a bull market soon. I'm about ready to do part 2, and I will show you some nice charts that are out there that paint a picture of possible good news in the short term ahead, and also show you the one stock that we must fully cover. So I'm going to go ahead and wrap it up there. This is Joshua Hayes at BigWayTrading.com saying have a great weekend.